So first of all, welcome to this webinar. This is Alice. I'm a co-founder and CEO of myPocketCFO, I would say all-in-one accounting platform to collect your financial books, analysis, and insights to help you to grow. That's our mission. Next to me is Riza. Many of you already know her. She's my lead in the CPA operation. I think in the past few weeks, between me and Riza, we have been hearing a lot from our founder community that, hey, I need help to close my 2024 book. I have this question, that question. So we figured that it is definitely 2024, finish your book and get to be tax ready. It's definitely something on top of founders' mind. Given this beginning of the year, it's a to-do list on your, I'm sure, on your mind, and we would love to help. I understand this topic may sound daunting. It may be stressful. Don't have to be. I think between me and Riza, our mission and our goal is to have, I would say this may not be the only session we have. We can have multiple sessions, but our goal is to get your 2024 book, I would say, closed or in a position that you feel comfortable and confident to file tax and to be able to draw insights to plan for your coming year. Sounds good? All right. With that being said, let's kick start. So today's session is pretty short. It's half an hour. I would break it down into two parts. In the first part, I would say I will spend 10 minutes just to outline in my view, a rather automated and easy way for you to potentially get your entire last year's book done within a week's time frame. And I'm going to use myPocketCFO platform as the default platform. I see many audiences here are coming from our client base, so you should be familiar. For the ones who are not using Pocket, I would say if you're using some other systems, the analogy hopefully is applicable. Or if you would like to try Pocket, we do have a 7-day for free. You could sign up right away, collect with your data and try to generate the book. Within the 7 days, everything is free, and we can even review your book. Until you feel ready, you do need a CPA to review. You can contact and ask to pay to activate. But within the 7 days, absolutely, you could free to use our platform to try this approach. Okay, with that being said, I'm going to start by sharing a quick methodology. What's the quickest way, in my view, or easiest way to get your 2024 book closed? Okay, so let me dive right into that. Before we dive into how to do it, I do want to stress that accurate financials matter, especially when it comes to the year-end financials. There are a couple of benefits if you spend some time and pay attention and have some commitment to get your 2024 books done, I would say as early as possible. Number one, obviously, we all know that we need to file annual income tax for our company. So to avoid tax penalty, I would say it's important you start working on your 2024 book right away if you have not started. And number two is many of us, even though we're all startup companies, you have investors or you have lenders, you borrow money. I'm pretty sure both investors and lenders, they will be asking, they will be expecting you to share your 2024 book with them so they can continue to track, to monitor, and to assess the financial health of your company. So accurate financials, especially of last year, definitely would attract funding and also to make sure your partners, i.e. investors and lenders, understand your financial health, and they can help you to continue to grow in the coming year. And when it comes to planning for the coming year, this is for, I would say, as founders and owners, this is for your internal purpose. I do believe an accurate financial would help you make smarter decision. And this is the perfect season for you to start planning your financial projections, your financial growth, or do you need cash and capital, so on and so forth, for 2025 and beyond. So keep in mind that getting your financials done at least serves the above three purposes: avoid tax penalty, file tax in time, win investor lender, and make smarter decisions. Okay. In-pocket's approach, to simplify that, get your financials done is not as daunting as you may have thought. I'm gonna explain Pocket's approach in simple 3 steps, and then we're gonna dive more into details after this. So first of all, I think with a lot of the latest, the greatest technology advancement, if you have not done so, I really recommend you to pick a automated platform. With automated platform like Pocket, you can basically set up the account and link pretty much all your financial transaction data with the accounting platform. If there are, in some cases, there are some financial data, such as like your POs, your invoices, with some legacy systems that cannot be linked digitally. Typically, a platform like Pocket, they would provide ways for you to upload the PDF or CSV file. So those files can be OCR'd into the accounting system as well. So pick a automated platform. I would really recommend a modern one, of course, like Pocket. Link all your data and upload all your remaining missing PDFs and CSV file to make sure your data is aggregated in one centralized place. That will be the first step. Okay. Second step is when a system like Pocket uploads all your data, it is going to assume some, for example, take Pocket, for example, it is going to assume CPG specific rules. And with the AI technology, we're going to try to automatically categorize all those transactions, whether transactions from banks, from e-commerce, from invoices, and bills into a ledger book for you. It is really important as, I would say, as the person who knows your business the best, for you to share, I would say, relevant business details with the platform or with the operations person. And typically, I would say in terms of the overview of the business system, it's important you share what are the sales channels you're selling into, and how you collect money from each channels. Obviously, there's like e-commerce channels like Shopify, Amazon, and how you collect the payouts from them, how you reconcile the sales with the payouts. It's important for you to share. So platforms like us, we can set up appropriately. In terms of cost, I would say it's important, again, at year end, check your, for example, in Pocket, check your cost of goods sold rules and validate if the cost of goods sold rule is still holding. If needed, talk to either Risa or me to adjust your COGS rule and COGS percentage. And we have a methodology to help you to adjust that. The other part of cost is identify key vendors. For example, your key marketing and sales vendors, your key contract vendors, like I would say either it's professional, uh, many of you hire operational person, some of you hire even salesperson. They earn commissions. Sometimes you spend a pretty big one-time deal on certain professional services, law services, insurance services. Make sure you document all those vendors in the vendor rules so that the system can take up and encode it. So the right side, I would say revenue sources and how you reconcile the payout with revenue, as well as the cost, they basically they come from income statement. So on the income statement, when you review, keep in mind of the rules you provided and see if the income statement compiled, I would say, align with the rules that your understanding holds. And then on the left side, I would say our balance sheet business management details. Balance sheet is, I would say, many of us are less familiar with, but in accrual-based accounting, balance sheet is very important because it shows your fixed assets as well as your debt and investors. And that's why by default, Pocket uses accrual-based accounting method because we can generate both income statement and balance sheet. If you're just using cash-based method, so I want to emphasize that cash-based method will not generate balance sheet. It will only produce a income statement. An income statement is sufficient for you to file taxes, but it alone cannot get you a loan or get you investor equity investment. It also does not have the full picture to help you plan for management and business decisions. So I would highly recommend you to adopt accrual-based accounting method. So you have both income statement and balance sheet. And in the balance sheet, I would say pay attention to your fixed asset as well as your other assets like your APAR, your cash account, your debt and investors. So many of us, because we produce goods and we have a long cash conversion cycle, we have debts, we have loans, and we have credit card. So pay attention to your debt to asset ratio and make sure they are healthy, right? This is very important for lenders, for example. Anyway, so all those understanding, when we collect those, we will try to, with Riza's help, we will try to encode those into the personalized rules engine for each and every account so that when our software does automatic bookkeeping for you, it can conform and customize to your specific business rules. And this process, I want to say, is an ongoing process because your understanding of business management, your configuration may change. Typically, may not change month by month, but may change, I would say, quarter by quarter or year by year. So do keep update on your business configuration. Keep us updated so we can collaborate with you to encode into our systems. So our system can produce a better and accurate book for you. Okay. The last step, and you're almost there. Last step is really once the system produces the book, you have the draft book. For example, you can go to Pocket, go to income statement, balance sheet, and review your book. You can review your book. Our CPA team, Riza's team, helps you because their team is also doing a review for you. And after every review, they will flag discrepancies, they will flag data missing, or they will flag questions for you to help them to finish the book. Typically, they will share in the CPA review notes with you that you can review and you can use our comment function to dialogue between our team and your team. And hopefully by doing that, I would say on a fractional time, on the asynchronous or even synchronous basis, we can get your book close pretty soon. So that's 3 simple steps. Some common mistakes, I would say, mixed expenses. Many of the early stage, I would say founders mix their personal expense with company expense. So it is very important. First of all, separate out your personal expense from a company expense. Really separate out the bank account, separate out the credit card, and notify our CPA team if certain transactions need to be skipped. Missing transactions. I think in today's world, there are just so many, there's a fragmentation of I would say of transaction sources. So make sure you collect with all your transactions, but also on the other hand, make sure you don't double count. Make sure the system does not double count your transactions. So work closely really with Riza's team to make sure we have a mutually exclusive and unique transactions ingested, completed, so that we can generate a complete, accurate book. Right. Last but not the least is don't delay review. And this session is for me and Riza to help you to answer some of the review questions to get you, I would say, hopefully to bust some of the obstacles for you to review and understand your books better. Okay, so I think that's all I have. Process-wise, if for the ones of our customers, you know us, for the ones who I would say who are not our clients, I would encourage you to go to our website and sign up. Again, everything is free. You can use our platform to try it. Sorry, use our platform to try to sign up and import your data, and you can generate a draft book completely for free. Okay. With that being said, I'm gonna stop here. And we only have 8 minutes. I think I can stay for a few minutes longer. We have a few minutes left. We're gonna open up the Q&A session. If you have any questions, feel free to type your question in the chat box, or if you have a question live, feel free to raise your hand. We would call you to help answer your question. Stu is asking, is there a more detailed checklist for reviewing the financials in Pocket? Yes. So I want to share with you an example. Hold a second of our CPA review list. Okay. Hold a second. So very good question, Stu. This is an example. It's a fictitious company. This is an example of our CPA review note. After this call, we'd be happy to send you a just a checklist. You could print it out. But basically, what we typically do, which is no different from the yearly and monthly, is we first check all your data ingestion complete. So month over month, we do like basically go to Pocket and check all every month the data is ingested. If you have not uploaded your bank statement, I recommend you upload your bank statement. Because in Pocket, you can click a button to make sure all those bank statements are reconciled. Right. If not, our CPA would intervene to help investigate. So first one, the checklist is really number one, check all your data ingestion from all the banks, and e-commerce and invoices are complete. And second is we will go through the revenue recognition. checklist. The revenue recognition checklist, if you are selling on Shopify Amazon, for example, we will request access to your Shopify Amazon, or we request you send us your Shopify Amazon sales report throughout the year, month by month. Our CPA will do a comparison and adjustment to match up with your DTC sales, just so you know. For your B2B sales, again, we go against your invoice ingested and your bank categorization. So it's automatically there. I would say do review those numbers. And for the COGS review, the next one is the COGS review. As I mentioned, we will send out a checklist so you can review your COGS, potentially adjust your inventory as well as your COGS rule. On the expense side, I would say first and foremost is if there are any uncategorized expenses, I think I suggest you basically go to Pocket. For example, I think I have a QA environment. If you go to Pocket, go to your transactions, and if you filter out by, let's say, uncategorized expense or uncategorized income, so make sure, I would say, all those uncategorized expense and uncategorized income items are categorized correctly. In that way, it will make your book more accurate in terms of categorization. And then in terms of a balance sheet, I would say go through your cash balance and go through your APAR. Make sure your APAR ending balance matches with your system of record, for example, QBO. I understand in some cases there might be mismatches. Again, in that case, engage with our CPA team to make sure they are reconciled. Loan is an important factor for you to check on the balance sheet. Make sure your year-end loan balance matches with whatever your lender's ending balance. If not, engage with our CPA to do book a journal entry to match it up for you. And then it's important, some of the customer asked the question, why balance sheet doesn't have a total column? So it's important for everyone to understand that the balance sheet number is an accumulated number. So we don't have a total column. So the balance sheet number is really just the ending accumulated balance, accumulated asset, accumulated liability, accumulated equity. So all you need to do is for the year end, go to the December and check for your December ending number. That will be your yearly number. Versus income statement, it's an incremental number each month. Therefore, income statement, we do have a total column. All right. Any other questions? Stu, does that answer your question? And we will for sure send out a offline checklist to you as well. Cool. All right, any other questions? Frank, are you speaking? You might be on mute. I could not hear. All right. Riza, okay, we have a question from Hera Fraternity. If I'm using QB right now and have been for years, do I switch or integrate? We produce our book independently, so you can keep your QBO. We can produce independently a book for you, and you can upload into your QBO for tax filing purpose. Benefits, Angela is asking benefits of the CFO pricing option. Benefits is if you want a CFO like me, to review and interpret and to share my insights, which I probably built from my decades of experience on the monthly basis or on the one-time basis, you should select the CFO option. If you just want produce your book for tax filing purpose, then I would say the CPA the 199 is the best option for you. If you are pretty savvy, you're coming from accounting finance background, you just want a place to aggregate your data, you could use our platform for free, or you could use the 99 without talking to any of the CPA or CFOs from Pocket. All right, Riza, anything from you? Any obvious questions, potential issues, challenges when you do the CPA review?
Yeah, so there are questions regarding like inventory true up. So mostly all of you has inventory for the end of the year. So we have adjustments that should be made to true up your physical inventory that you made last December so that your balance in inventory asset in the balance sheet would be equal to your physical count. So I think that's very important to have an accurate inventory asset balances.
At the year end.
Yep.
Right. That's a great point. Typically, we do year-end adjustment. We in our checklist, we will also share a typical year-end adjustment we do for our clients. Inventory adjustment is definitely one of the year-end adjustment we'd like to do. What might be some other year-end adjustment, Riza?
So there are those clients that have their loan balances. So they have like interest to be recorded like that. And like for the Shopify receivable to be accurate based on their Shopify reports and summary and Amazon receivables. So mostly the receivables, payables are need to be true up.
Gotcha. Receivables, payables, inventory, and loan balances. We'd like to at least, if not more often, at least do year-end adjustment.
Yeah, agree.
Sounds good. Okay, cool. All right. Sounds good. So the goal is again is to be here, answer any questions. We will also send out the checklist. Thank you, Stu. I think it's a great idea. We're gonna share a more detailed checklist, including both review checklist and the year-end adjustment suggested list. If there's anything else you guys are looking for, feel free to email me. You can also email support. We're here to help. And if you want to sign up with our platform, again, go to app. I would say app.mypocketcfo.com. And you could play a book by yourself. If you need our help, feel free to reach out. All right. Thank you, everyone. Happy closing the book. Again, we're always here. If you want support, feel free to reach out.